Welcome to the Theo video for Wednesday, February 3rd, 2016. I'm Jeff White, and it was one very wild day out there in the markets. If you did not get a chance to look at it during the day, you might flip on your screens and take a look here at these net changes and say, yeah, there wasn't a whole lot going on. You can jump to the conclusion that it was a pretty insignificant day, but you would be wrong. Maybe you look here at the S&P 500 and you say, hey, it was up 9 points and change. Beats yesterday's action. It gave up 36 and change then, so not a bad little day there. Russell pretty much dead flat on the day. NASDAQ down about 13 points. And you say, well, that's sure better than yesterday's 103-point loss. And you would be correct. However, when you jump to that conclusion just based purely on these net change values, you're missing a lot of the big picture. And today, that absolutely was the case. Take, for example, that same NASDAQ composite. When you compare the high and the low in today's session, you notice that this thing had a trading range of almost 123 points. It was north of 122 points. That is significant. That's a lot going on under the surface. And so we're going to take a look at that here because one of the biggest events that took place today was tied to crude oil. And there were a number of other different stories taking place out there, but I wanted to really just show these intraday charts here of crude oil, which is down here in this lower pane, and the S&P 500 futures, the ES, in this upper pane. And you'll see that these are 2-minute bars. So every bar on here is a 2-minute bar. Well, if you look here, we were kind of at our lows at about the same point in the day in both cases. But for crude oil, you can see that the low of the day was painted with this 10:34 a.m. bar. This is Eastern time. So about an hour after the market open, crude oil turned significantly higher. And yes, that was right on the heels of an EIA petroleum status report. So it's no surprise that it came by way of news, but we saw a huge lift from there in crude oil as the low had been set at 29.74, and this thing went out around 32.5 later. So a huge move to the upside in terms of crude. But take a look up here at the S&P 500 futures, and you see that the low of the day right here at 1865 was painted on the very next bar. So crude turned first, and then the ES followed. And then from there, just look at how these two charts correspond with each other. The price action is almost identical throughout the course of the day. And so it's just impossible to deny this very, very important relationship here in terms of crude oil and the way that it's still continuing to play a major role in the overall market, in particular the SPX. So you can also take a look at the financial stocks, which really saw a big turnaround as well off of their worst levels of the day. We were reaching new lows here at our worst levels in the XLF. That was at $20.45. We saw a 60-cent lift off the low to finish at 21.05, so about a 3% rally off of the low. And many of these other financial names like Goldman Sachs or Citi, Bank of America, lots of these things have been reaching new lows here with today's bar, but they lifted off their worst levels of the day. And again, they remained closely tied to the price action in crude oil. So all this correlation, it's incredibly important to keep track of. And we've got to continue to pay very close attention to what's going on out there in the markets and kind of on an intermarket basis. The SPX, by the way, last week's low, kind of some temporary support you could call it, was at this 1872 level. That was on the 27th, so Thursday or Wednesday's bar. Today, the low, 1872. We tagged that number to the number and promptly lifted 40 points. So it's a significant lift from there, greater than a 2% rally, yes, on the heels of crude oil, but we came right down to a level. So it's important to keep these levels on your screens. And even the ES, we can even zoom out a little bit further here on this upper chart, and we can look at here for 2 days running, basically, from both sides of the market. We continue to see the ES respect this 1911 area. It had been some support, and then yesterday throughout the session, it proved to be some resistance. And then even overnight, we came right up to that same level on a few different occasions in the very early morning hours today, and even right around the market open, and we failed at that level from beneath. And here again, this afternoon, we came up right near to it, and still, even this evening, we're still churning right near that same level. So it's very important to continue to keep these levels on your screens. They do provide ongoing validity in what really has been an otherwise extremely messy environment. So there's a lot going on out there. Even today, we saw other things taking place out there. We saw the dollar making an enormous move to the downside, and that's, of course, having some ripple effect out there. We saw the bonds. We saw ZB finish about 2 points off of the high of the day, and so they had been ripping higher this morning. In fact, you flip over to like a 5-minute chart, and you see here this morning just how sharp this move was to the upside. But like air out of a balloon, they really collapsed here throughout the remainder of the session. And so that's a significant pullback there that we saw on an intraday basis in bonds. However, they remain very elevated compared to where they've been, so it's not likely that these things are going to fall directly flat on their face. We even saw gold continue its advance here over the course of the past few weeks, and so making a new multi-month high and just continuing to try to retrace a lot of this decline from late last fall. So there are a lot of things out there to be keeping a close eye on right now, but absolutely oil and the relationship with the S&P 500 is kind of front and center right now, and of course the financials, the way they're sort of following that entire situation is extremely important right now. So we're going to continue to see if this S&P 500 is able to maintain its lift off of these January lows. So that was down to 1812. We're sitting about 100 points right here to the number off of that level. But it's going to be very important to see if we can make a new recovery high and push beyond this 1950 area on the way back up. Otherwise, we're subject to another round of selling. And either way, you can bet that it's going to be exciting, and it's going to provide us with some opportunities one way or another. Thanks a lot for joining us here at TheoTrade. I'm Jeff White, and I will see you in the chat room tomorrow morning. Have a great evening.